Hello friends, today let's break down a myth. A nunk half, $5 trillion. The script we're talking about today is absolutely explosive. Wall Street, no, the whole world has seen the birth of the first company to break $5 trillion in market capitalization, Nvidia. But the $5 trillion figure itself isn't the most frightening part. What's most frightening is its acceleration. Let's take a look. Nvidia only just broke $4 trillion in July 2025, and just 3 months later, it gained another trillion. Trillion-dollar growth is no longer a 10-year project, but quarterly KPI. So what exactly does $5 trillion mean? Let me give you an analogy, and you'll instantly understand. First, let's look at the rivalry among tech peers. Apple's market cap is approximately $4.01 trillion, while Microsoft's is about $3.85 trillion. Secondly, let's consider the concept of rich enough to rival a nation. This figure has already surpassed the annual GDP of several G7 industrial powers. For example, Germany's projected GDP for 2025 is $5.01 trillion, Japan's is $4.28 trillion, and India's is $4.13 trillion. I know that comparing a company's market capitalization to a country's GDP is like comparing apples and oranges. But this flawed comparison is itself the most important story. Market investors believe that a company's future earning potential is more valuable than the entire annual economic output of industrial powers like Germany or Japan. This in itself is a profound statement. Next, let's talk about the wealth of the AI architect. As the company broke $5 trillion, Jensen Huang's personal net worth soared to approximately $180 billion. The key isn't the total amount, but the speed. Nearly 96% of Huang's current wealth has been accumulated since 2020. This can be said to be one of the fastest and largest accumulations of personal wealth in human history. This isn't riding a rocket, it's more like opening a teleportation portal. Alright, so why is this happening? Is it a bubble? The core narrative supporting this valuation is that Nvidia is the shovel seller in the gold rush of the AI revolution, or more accurately, the AI arms dealer. This narrative is more real than most people understand. First, even if many AI application companies ultimately fail as the sole central beneficiary, Nvidia still makes a steady profit. Secondly, this has become part of US macroeconomic policy. Harvard economists have calculated that without AI-related investments, the US GDP growth rate in the first half of 2025 would only be 0.1%. This means that Nvidia is no longer an ordinary tech company. It's more like a defense contractor or a utility company, a strategic national asset. Its revenue is sustaining the US GDP. If arms dealer is the narrative, then $500 billion in orders is the physical evidence. The $5 trillion valuation was directly triggered by an announcement Jensen Huang made at the GTC conference. He announced that Nvidia had secured $500 billion in AI chip orders, or more accurately, $500 billion in revenue visibility by the end of 2026. This announcement completely changed the investment logic. $5 trillion is no longer speculation about the future, but the market digesting revenue that has already been accounted for. Nvidia's monopoly doesn't stem from silicon, that is, hardware, but from software. Its true moat is CUDA. This is a software platform Nvidia has spent nearly 2 decades building, and it has become the established standard for accelerated computing, deeply integrated into all mainstream AI frameworks. This has created a sticky ecosystem with millions of developers, making it extremely difficult for customers to switch to other platforms. Now, Nvidia is leveraging this monopoly to move up the value chain, playing the standard oil trick. The first step is selling crude oil, which is GPU chips. The second step is selling refined gasoline, such as NVDA and NIM, which are subscription-based software suites. The third step is selling gas stations, which are pre-integrated AI factory blueprints. They are becoming the general contractor for the entire AI economy. The $5 trillion valuation has sparked intense debate in the market. Let's look at some of the most critical viewpoints. The first viewpoint is the bubble theory, which suggests this is merely a repeat of 2000. The argument is that the market generally considers the valuation crazy and overstretched, but analysis suggests that this bubble narrative is misused. The dot-com bubble of 2000 was built on speculation without revenue. The AI boom of 2025, however, is built on huge real demand and record-breaking revenue. Bubbles are not non-existent, but it's a layered bubble, and it's not in the infrastructure, but in the application layer, such as those failed AI hardware startups. Whether the gold diggers find gold or not, Nvidia has already received payment for its shovels. The second viewpoint is the industry theory, which suggests everyone is working for Nvidia. The argument is that this is not just an exaggeration, it's a fact. This AI arms race is evolving into a massive wealth transfer from all other tech giants to Nvidia. Data, or the Nvidia tax, shows that Amazon, Microsoft, Google, and Meta are expected to have a total capital expenditure of approximately $400 billion in 2025, with most of it allocated to Nvidia's GPUs. There's a huge divergence here. Wall Street has begun to strictly scrutinize this Nvidia tax, causing a clear split. The event of October 30th, 2025, perfectly illustrates this. Amazon's stock surged by 11% after it announced its $125 billion CapEx plan. This is because investors know that Amazon's AWS division will earn this money back from external customers. However, Meta's stock plummeted by 11.3% after it announced its $72 billion CapEx plan. This is because investors view this as zero revenue spending, reminding them of the $70 billion metaverse experiment. The third viewpoint is the competition theory, which suggests that challengers are closing in. The argument is that Nvidia's 80 to 90% market share is clearly unsustainable, and competitors such as AMD, Google, and customer self-developed chips will eventually emerge. Analysis suggests that competition is real, but Nvidia faces a multi-front war. Frontline one is AMD's MI350. AMD is positioning itself as an equal alternative to break Nvidia's pricing monopoly. It's not trying to surpass Nvidia in all aspects, but rather targeting a key architectural weakness: memory. AMD's MI350 is equipped with 288 gigabytes of HBM3E memory, far exceeding Nvidia's B200's 192 gigabytes. For large AI models, memory capacity is often the bottleneck. Frontline 2 is Google's TPU Trillium. Google doesn't sell commercial chips. It's building a walled garden. Google's TPU wins internally on energy efficiency and total cost of ownership. It's a controllable threat and won't threaten Nvidia's dominance in the broader enterprise and government markets. Frontline 3 is customer defection, such as Meta's MTIA. Meta is deploying its self-developed MTIA V2 chip on a large scale. However, the key clarification is that this chip is optimized for its recommendation models, that is, the inference for Facebook and Instagram feeds, which is its largest workload. It cannot yet replace its high-end NVIDIA GPUs used for training generative AI. The fourth viewpoint is geopolitical risk, which is China's backlash. In our analysis, this is the single largest substantive risk facing the company. CEO Jensen Huang has now publicly confirmed that Nvidia's market share in China's high-end AI chip market has completely collapsed, falling from 95% to 0. Kong estimates that the lost market opportunity in China alone this year amounts to $50 billion. The US-China leaders meeting at the end of October 2025 failed to resolve this issue. When specifically asked if the sale of high-end Blackwell chips to China would be allowed, Trump's answer was a clear no. We are not talking about Blackwell. As Hong has always warned, US export controls have not stopped China's AI progress. Instead, they have forced China to accelerate the development of its own domestic chip industry. Finally, let's summarize the $5 trillion paradox. Nvidia's $5 trillion valuation is not speculative fantasy. It is the logical result of a decades-long strategy. It has successfully built an unshakable full-stack monopoly, namely CUDA, and has translated this technological monopoly into $500 billion in real orders. However, the $5 trillion milestone marks the end of the technology war and the beginning of two new conflicts. First is the geopolitical war. Nvidia's future growth is now permanently capped by US foreign policy. Secondly, there's the commercial war. Nvidia's own customers, such as Meta, Google, and Amazon, are now its most dangerous competitors. The $400 billion Nvidia tax is forcing these customers to invest billions of dollars in a desperate escape to break Nvidia's monopoly. This constitutes the ultimate paradox. Nvidia's $5 trillion success is the root of its goodwill, worse, Nvidia of its tax. And this crown is both a symbol of complete victory and the reason why the war is far from over. So, will Nvidia continue to dominate as the AI arms dealer, or will it be backfired by its own customers and geopolitics? Friends, feel free to leave your comments in the comment section.